All right, let's talk about the US housing market. It's an absolute beast. It's complicated, it's emotional, and it is always, always changing. And every quarter, we get this flood of information from the companies that are right there on the front lines. So today, we're going to give the market its report card for the fourth quarter of 2025. Let's see who's passing and who's failing.
So here it is, the big question on literally everyone's mind, right? Whether you own a home, you're trying to buy one, or you're just watching the chaos from the sidelines, is this thing a boom or is it a bust? Because the headlines are screaming both things at once. Well, the real answer? It's not a simple yes or no. Oh no, it's way more interesting than that. To get to the real story, you gotta go straight to the source. And for us, that means the latest financial reports from the biggest players. We're talking mortgages, real estate, home building, the whole shebang. These reports are the ultimate truth tellers. So let's dig into the numbers and see what they tell us about who's really winning, who's losing, and what it all means for the rest of us. Okay, first up, the mortgage sector. You can think of this as the engine room of the entire housing market. And in Q4, well, that engine was firing on some cylinders and kind of sputtering on others. It was a seriously mixed bag. And this slide, wow, it really shows you the stark contrast we're talking about. I mean, look at this. On one side, you've got companies like Figure and Finance of America where profits just exploded. We're talking hundreds of percent growth. But on the other side, a totally different universe. You've got firms like loanDepot posting 9-figure losses, and even giants like Wells Fargo watching their mortgage profits take a hit.
So what does that tell us? Here's the most crucial point. The market conditions alone did not decide who won. You know that old saying, a rising tide lifts all boats? Well, that did not happen here, not at all. It really came down to company strategy. Who was ready to adapt and who just got caught completely flat-footed.
And just to give you a sense of the scale here, for the companies that got it right, look at this number. $163 billion. That is the value of the mortgages originated by just one company, UWM, in 2025. It just goes to show you the massive amount of money that was on the table for any lender with the right game plan. So, what was that winning game plan? In a word, refinancing. With interest rates where they were, it created this perfect storm for homeowners to get a better deal on their mortgage. This refi wave, as they called it, just swept the market. And the lenders who were truly prepared for it, the ones like UWM who had the tech and the capacity ready to go, they rode that wave to absolutely incredible profits. And this chart just lays it all out, plain as day. Look at this. You can see Finance of America's massive 175% profit growth right next to loanDepot's staggering $108 million loss. We're talking about the same market, the same quarter, but wildly, wildly different results. It proves that strategy was the absolute key. All right, let's shift gears now and see how this all connects. Let's look at the real estate brokerages and the big tech platforms. For them, Q4 was a huge reality check. It was this moment where all these different business models got put to the test, and honestly, some of the results were pretty surprising. And you can see right here, there is no one-size-fits-all approach to success. You've got Zillow, which actually got back to making a profit by smartly branching out into mortgages and rentals. Then you have Opendoor, the iBuyer that makes those instant cash offers on homes. They posted a massive $1.3 billion loss for the year, but they swear they see a path forward. And then there's EXP, which found success with a totally different playbook. I absolutely love this phrase from the reporting, EXP's quiet flex. Think about it. While the total number of real estate agents in the market was actually going down, EXP somehow managed to get more productivity out of the agents they had. It's just a classic case of doing more with less and finding a way to thrive when things get tough.
So here's a quick visual scorecard for the sector. You can see that a pretty solid group of companies, including Zillow and RE/MAX, landed in the profitable slice of the pie. But that other slice, the significant loss one, yeah, that's pretty much dominated by Opendoor's results, which shows that tech-heavy model of instantly buying and flipping homes is still facing some major, major headwinds.
So why should you care about these corporate battles? Well, because this intense competition is ultimately a race to win you over. For us, it probably means we're going to see even more sophisticated technology, better tools for finding and buying a home, and maybe most importantly, it could put a lot more downward pressure on those agent commissions. Okay, for our final piece of the puzzle, let's check in with the homebuilders. I mean, these are the companies literally building the houses of the future. And let me tell you, they are not just sitting around waiting to see what happens. No, they are making some big strategic pivots to get ready for whatever comes next. So, what are they doing exactly? Well, they're adapting, right? They're adapting to a market where affordability is a huge, huge issue. And we're seeing about three main strategies emerge. First, some companies like Beazer are pivoting toward more expensive, higher margin homes, basically catering to wealthier buyers who don't care as much about interest rates. Second, others are really sharpening their focus on specific, niche market segments where they know they can win. And third, some are making a really big gamble on something called spec homes.
So what in the world is a spec home? Well, it's a house built on speculation. That means the builder starts construction without having a buyer already lined up to buy it. It's a huge calculated bet. They're gambling that by the time the house is finished, demand will be strong and a buyer will be right there waiting. It's a very high risk, but potentially very high reward kind of play. And hey, it's not just those three strategies. Others are finding different ways to stay profitable. You've got some builders aggressively trying to grab more market share, others using a really varied product mix, and some taking a land-heavy, super high-margin approach. It's actually a fascinating look at all the different ways you can try to succeed. Okay, we have looked at the lenders, the real estate tech giants, and the builders. We've seen some big winners and some pretty big losers in every single category. So let's pull it all together. What is the big takeaway here? What is the final grade on the housing market's report card? Here's the verdict. First off, it's not one single housing market. It's a whole bunch of different markets, and success is incredibly fragmented. In the mortgage world, it really is a tale of the haves and the have-nots, and the only thing separating them was their strategy. In real estate tech, it's an all-out war to find the right business model, and it looks like Zillow is starting to find its footing again. And finally, the home builders? They are not waiting around. They are actively placing bold bets on what they think the future holds. So the answer to that big question, boom or bust, it isn't a single grade. It's this really complex report card, full of fragmented successes and some pretty spectacular failures. The market is a battleground of competing strategies, which of course leads to the one question that really matters to everyone. With all these giants fighting for profit and all these builders making these huge bets, what on earth does all this mean for the price of a home in 2026? Now that is the story we'll all be watching next.